What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Hope you're doing well on this Monday afternoon. And Monday is Bitcoin Fundamentals Day. So I put out a free weekly newsletter on my website every Monday, the Bitcoin Fundamentals Report. And you can go to the website, sign up for it free. And then I do these live streams to read through it and just kind of talk through the different ideas. I mean, a lot of it is, you know, I cover all of the different sectors in Bitcoin. I cover headlines, I cover macro, I cover price, I cover mining, I cover lightning and layer 2 stuff, all over the place. So it's I think it's the broadest newsletter out there that kind of summarizes everything that's going on in Bitcoin. And of course, then I add my 2 cents, my little flair as the dissonant Bitcoiner on to all of the topics we talk about. But here you go, bitcoinandmarkets.com. Check it out. Sign up for the free newsletter. Let's dive in. I usually start with a meme, but guys, I was running late. I was scouring the interwebs for a Bitcoin meme that was good, representative of kind of what we're seeing in the market right now, and really couldn't find anything. So this is the first newsletter in probably 100 issues that has not had a meme to start. But anyway, let's get into the snapshot of Bitcoin weekly trend. It's attempting to break out. We're going to, of course, go over a price chart here in just a minute. My thing is, price is all that matters, really, because if price were going down consistently, nobody would care. You wouldn't buy and hodl your Bitcoins because price was constantly going down. For 10 years, price went down. This space would die. People wouldn't be holding Bitcoins. The price of Bitcoin would crash. So price is everything. Price has to keep going up. But okay, attempting to break out. Media sentiment is positive. There was some stuff with Elizabeth Warren, but overall, I still think that the media attention out there is positive for Bitcoin. Network traffic is very high. Mining industry is growing rapidly. We'll cover a couple stories there. And days until halving is 141 days. Price at the time of writing was $37,009. That's down $500 from last issue, or 1.5%. Market cap is still up there over 700 billion, 723 billion. Satoshis per dollar, 2701, and 1 finny, or 1/10,000th of a Bitcoin, is $3.70. Mining sector, big adjustment this, I guess, happened yesterday morning. There was a huge difficulty adjustment, up 5%. The next adjustment now is in 12 days time, roughly, and that is now very tentatively estimated to be a negative 2%. For those that are new, every roughly 2 weeks, Bitcoin goes through a difficulty adjustment. And so if the number of computers on the network crunching the algorithm increases, Bitcoin has a built-in function to make it harder to mine. If fewer computers and hash rate are used to crunch and find the blocks, then the difficulty decreases. So as difficulty is going up, hash rate is going up. The fundamentals from a mining perspective are extremely healthy. Okay, mempool, almost 300 again this week, 300 megabytes, just a hair under that at 298. Fees for the next block, also under $3, 57 sats per virtual byte, and that comes out to $2.95 for the average transaction. That's not every transaction. That's the average, maybe, I don't know what they consider average. 3-4 inputs and 2 outputs, something like that. So the average size transaction costs about $3 to send. Of course, if you're doing ordinals, you're doing some inscriptions, that can go up to hundreds, maybe even thousands of dollars to inscribe things onto Bitcoin. So you better be pretty damn sure that your stupid NFT link, it's not even an actual image, but the NFT link, wherever you're linking to, is worth $1,000 before you do that. All right. The lowest fee lowest priority fee is $2.80. But of course, you can always put a very low fee in there. If you just want to, if you're just like kind of moving coins around in your own wallets between wallets or something, and you don't really care if it takes several days to get confirmed, you can always go low ball it, right? Do 3 Satoshis per virtual byte or something, and it'll probably get picked up. I don't know. Right now, the mempool is so clogged, it might take a long time to get picked up, but it eventually will. Lightning capacity is up a little bit this week, 5,416. That is almost 0.5% higher in capacity. So this is good. This is the second week in a row the capacity has, continued to increase. However, the number of channels in the Lightning Network fell over 1% in 1 week, down to 60,785 channels. So Lightning Network, I love it, but it remains to be seen what's going to cause the big time adoption of it. It works. There are some concerns about certain vulnerabilities that have been raised recently that we've covered on previous newsletters, but it overall works. So if it overall works, you would expect there to be more than 60,000 channels. That means there's probably about 10,000 users. Unless you have, I guess you could have custodial wallets. So that could be different. Maybe, but I don't think it's much higher than 60,000. I really don't for Lightning Network, but it's possible. Okay. In case you missed it, this is some of this content that I put out recently. So member content out last Friday, 2 scenarios to watch develop in 2024. What I did on this post for the professional tier on the website is I looked at, okay, if we are going into a deep recession in 2023, what should we expect to see transpire over the next 6 months? And we looked at the S&P 500, we looked at yields, we looked at oil, we looked at all sorts of stuff. And so we will be able to, I guess, filter out which one it is. Is it a deep recession, mild recession, or no landing? What should we expect to see in the charts with no landing? Well, now members here, after reading this post from on the professional tier of the website, you guys are able to have that and see, okay, well, maybe check back in January and compare it to there. Okay, where are we? Oh man, so that means we're going into hard recession, or that means it's tending more towards a lighter recession. So you have to make predictions in order, and that's what I have done throughout the last 5-6 years on this podcast. And a lot of them turn out very, very well. So you can make a prediction using this, my macro thesis, and use that to weed out what are the possible outcomes of this. So anyway, check that out, guys, if you want to sign up. That helps support me making all of these live streams, all of this written content for Bitcoin and Markets, as well as Bitcoin Magazine Pro. It helps support everything. So check out my different tiers on the website. Community streams. I got one pretty much ready to go this morning, but I use Audacity to a program to, put the bumpers on it and some of the music and stuff. And it crashed on me this morning, so I had to go back in there. But a new podcast episode should be coming out soon. Of course, live streams on YouTube and Rumble. Communism works better than markets with today's compute, ? So I wrote this over the weekend at my in-laws' house and published it to just any paid member on the website. And now I've made it public today. So check this out. This is linked to a blog post on my site. And the next new one here from Bitcoin Magazine Pro is global liquidity or halvings, which create Bitcoin cycles. I've seen a lot of talk about liquidity increasing, but I believe that they're interpreting a response to low liquidity as high liquidity. So low liquidity will force government spending higher, will force the Fed to do certain monetary policies, be expansionary. quote unquote expansionary. And that's what people read as being higher liquidity, but it's actually a response to low liquidity. But anyway, I look at that in Bitcoin Magazine Pro. Check that out at the link. Okay, let's get into the headlines of the week. Finally, we're here. Binance to settle U.S. charges, sources say. Wall Street Journal reports CZ to step down. And this is kind of old news. I just found a good article that had some stuff in it. Of course, most people should know about what's going on with Binance. They've been sued by the SEC. They are charged with money laundering and all these other things. I think there's still a court case going on against them, but this was a separate money laundering investigation. But anyway, so let's read this. Binance, the world's largest crypto exchange, faces U.S. charges for failing to maintain a proper anti-money laundering program, operating an unlicensed money transmitting business, and violating sanctions laws, according to Tuesday's court filing. So what Binance did was they split it up between Binance and Binance US to kind of, they just mirrored the website with putting Binance US up there as the logo. The funds were being commingled in the back end. So there was no actual difference between Binance and Binance US. That's one of these big problems here. The company plans to settle the long-running US Department of Justice case in a deal to be announced later Tuesday. So last week, a person familiar with the situation told CoinDesk. All right. To be honest, I watched this whole drama from pretty much the Binance launching. I think it launched like in 2016 or something like that. I've seen Binance go through this whole thing. I've watched Binance grow, become dominant. I've watched FTX blow up. I've watched all this stuff happen, all the rumors fly around Binance. But I really didn't watch it that closely because it doesn't matter in the end, right? I do not use Binance. And I assumed they were dirty, but not as insolvent as FTX. And I think I wrote about that about a year ago now. When did FTX blow up? Yeah, right around a year ago, right? I wrote it up at the time. People were like, oh, Binance is next. I said, oh, Binance is probably not nearly as bad as FTX or is insolvent. And it turns out that they got charged with money laundering. That's the big thing. They have held it together. So yeah, CZ and Binance, they were not necessarily as insolvent. They're probably slightly insolvent. But anyway, CZ has now pled guilty to money laundering charges. He was fined $50 million personally, while Binance was fined $4 billion. This is not a repeat of FTX. Many commentators have said that the SEC has been waiting for all the worst elements to get pushed out of the industry before they approve a spot Bitcoin ETF. Binance and CZ were the last of these bad actors, the theory goes. Whatever the case, they issued and traded total scam Ponzi's, so I don't feel sorry for them. In the end, everything is good for Bitcoin, and this is no exception. All right, so real quick summary of what's going on there with Binance. Like I said, I've been here for it, but it has not been all that important in my opinion. And we saw that on the charts. Bitcoin almost tried to break out on the news. All right, next story is buy the rumor, sell the news. Actually, the headline says buy the rumor, buy the news on spot BTC ETF. All right, so the sell the news meme is getting some major play this week. Many are comparing the imminent spot Bitcoin ETF launch to the CME launch of Bitcoin futures, which happened to coincide with the top in 2017. The sheer size of applicants, which include the world's largest asset management company, BlackRock, along with fellow giants like Fidelity and Franklin Templeton, means any approval would be far more influential than earlier milestones, such as the CME introducing Bitcoin futures in 2017 or Coinbase going public on NASDAQ in 2021. Okay, Dan Moorhead said this. Those developments were buy the rumor, sell the news events, wrote Moorhead Monday. This time is different. He was well aware of the red warning flag typically raised upon utterance of that phrase. Neither of those events, he argued, had any impact on actual demand for Bitcoin. A BlackRock ETF, on the other hand, fundamentally changes access to Bitcoin. It will have a hugely positive impact. I don't put much weight in the sell the news narrative. This is me talking. Bitcoin is just starting this cycle, and the ETF applicants. The ETF applications were filed because there was a groundswell of demand from clients of these firms. BlackRock and others didn't just think to themselves, let's launch a Bitcoin spot ETF. That'll be fun to fight the SEC. No, they had massive demand from their clients. These clients want an approved product to invest in. Sorry, there's quite a few typos, guys. I do not have an editor for this. All ETF applicants together have 20 plus trillion of assets under management. If 1% of that comes into Bitcoin over the next 2 years, which is a conservative amount, that is 200 billion. Remember, higher price for Bitcoin drives higher demand. Remember, Bitcoin is a Veblen good. As the price of Bitcoin goes up, the demand goes up. And it's a feedback loop. It works the opposite the other way, though. As price drops, demand drops. Okay, but there's a floor, and that floor is holders of last resort, the people that hold Bitcoin no matter what. And that number continues to increase. So the floor continues to step up, and Bitcoin continues to have these exponential rises because higher prices beget higher demand. So all in all, I don't buy the sell the news stuff because of where we are in the cycle. Okay, let's go on to the next one. BlackRock and ARK stand firm on in-kind creates. Last week, BlackRock met with the SEC to explain why they want in-kind creates, in contravention to the SEC's instruction to switch to cash creates. And I linked to Eric Balkunas, and he says, another subplot in this never-ending drama, BlackRock and ARK standing firm on in-kind creates because better for investors with spreads and tax, while word is that the SEC said you need to do cash creates. Okay. Oh, man. Hold on. I got sent away. All right. So let's go down here. What else do I say about this? I've discussed the difference as I understand it on previous streams and newsletters. In kind means the buyer of the ETF approaches BlackRock with Bitcoin and they turn it into an ETF share where the Bitcoin is held by the ETF custodian. This makes taxes much more simple and the redemption process, which is taking delivery of the Bitcoin backing your shares, much more simple. But it forces many wealth managers and brokers to be in the market to buy Bitcoin. So it makes these brokers, whatever your investment broker is or your wealth manager, whoever you're using, they have to be the one going out there and buying Bitcoin and not BlackRock. So it makes it a little bit more, there's slightly more risk, right? Because you're more transactions are happening with that Bitcoin. It's going from the exchange to the wallet of whatever broker, then to the wallet of the custodian for BlackRock. So there's an extra hop in there. But the benefit is that it's easier on taxes. It also creates a better, tighter spread. So I say in-kind creates, therefore, naturally make the spread to NAV tighter as bids are more dispersed. Because if you send if you just send your cash to BlackRock or whoever, maybe at the end of the day, maybe a couple times a day, they go out there and they buy the Bitcoin or they sell the Bitcoin. Let's say you are trying to redeem your shares or whatever. And so they are doing larger transactions in the market. There needs to be a higher level of major liquidity. Because think about that. If you're settling $1 billion a day back and forth through this ETF, I mean, those transactions could be very big, what BlackRock is having to do. They need to have the liquidity. And if you just dump or you buy $1 billion, you're going to add a lot of volatility back into the system, right? So in-kind creates makes it so all the brokers are out there buying individually. that spreads it out and that keeps the spread to NAV tighter. Very interesting. Cash creates are where the ETF shares are bought with dollars and then the issuer goes out to buy Bitcoin. This is simpler for the regulator. So the SEC, it's much simpler to have 8 people that you can ring on the phone and you can say, hey, you're doing these market transactions in Bitcoin, blah, 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 blah. But what if you have 8,000 or 80,000 different brokers out there in the market buying Bitcoin, and for this to enable them to buy into these spot ETFs? So it's much simpler from a regulatory perspective. These cash creates are. There are regulated buyers and holders. It is also very convenient for brokers and individual investors because they can use dollars. However, this makes the job of the issuer more complex, the tax implications more complex, and redemption more complex. So those are the kind of ins and outs. I'm not an ETF expert here, especially on this type of really nuanced stuff about cash creates and in-kind, but I'm learning and I follow experts. So that's the information that I share. Okay, next story. El Salvador Bitcoin advisor, that's Samson Mao, reveals 2024 Argentina adoption plan. Samson Mao will be talking to new Argentina President Javier Milei on forming an Argentine plan for Bitcoin. Quote, not every country needs to do exactly what El Salvador did, Mao says. There are many ways to enable Bitcoin adoption, pointing to Milei's campaign promise to allow private money to be used in the country. What this means is the Argentinian people can simply use whatever money they want, including Bitcoin and Tether, which is massively popular in the country. I believe his concept would serve Bitcoin just as well by making it legal tender. Or I believe this concept probably, that was not my typo, but I believe this concept would serve Bitcoin just as well as making it legal tender. So the headline was kind of hey, we're going to reveals plan. And then he's like, well, we don't really have a plan, but you could just make it legal. So I think that's the route they're going to go, that they're going to end up going. And I think there was some news around dollarization that he made some further comments, and people were interpreting it as him stepping back some of his most extreme comments about dollarization and getting rid of the peso. But I don't think so. I think he's going to go through with that. And I think he's going to make Bitcoin legal tender. I don't think he's going to make it the currency of the realm. That's going to be still dollars, just like in El Salvador, right? So anyway, that's all for that one. Let's go on to some macro news. People now guessing at first rate cut by the Fed. My, what a difference a couple weeks makes. The sentiment has completely flip-flopped from higher for longer to when rate cut. And really, I just wanted to share this image. And I did share it in Telegram there, guys, a little bit up. It's the one, the headline is Fed policy rate expectations, current versus prior easing cycles. You see the dashed lines are what the Fed funds futures curve looked like a month ago. And the red dashed line is what it looks like today, or at the time of making of this chart by Vanda Research. So it has come down. That is anticipating more rate cuts. That's more bearish on the economy. Remember, rates going down is bearish. Rates going up is bullish. The interest rate fallacy. People think that rates going to 5% means the economy is going to crash. No, if rates can go to 5%, that means the market can push them to 5%. If the rates go down, it means they cannot be sustained. The market cannot sustain those higher rates, so they drop. So falling rates falling rates is bearish. Rising rates is bullish. So anyway, this is just taking a look at all the past easing cycles. And I think they're going to cut. I think Powell is going to cut. So if you look at this dark green line, can I zoom in any more on this image? Let's see. No. Maybe a tiny bit here. Okay. Come on. This dark green line that kind of ends right here in the middle of this blob, that is the 2019 cutting cycle of Powell. Of course, right after that was COVID, and so they didn't include that. It went to zero. I think that's the path that Powell is going to follow this time. He's going to cut sympathetically, preemptively. I've said this now for a long time. The Fed is going to pivot, quote unquote pivot. I think they have pivoted, because a pivot is just a change of direction. From raising to flat is a change of direction. It's not a complete 180 U-turn, but no one called it a U-turn. They called it a pivot. So anyway, where was I? 2024. The first rate cut will be sympathetic. I think Powell will try to get out ahead of it, just like he did in 2019, but he won't be able to, and it will crash. Not just like 2020, because 2020 was this singularity with COVID, but it's going to be pretty bad. It's going to be a mix between COVID and I think the great financial crisis. So buckle up. It's going to be bad. Okay. Next story. I got to zoom back in here. Next story in macro. Single family home prices hit negative 18% year on year in October. I just saw this was released today, so I thought I would put it out. So another indication that CPI has topped hard. This is despite many tricks used by builders to offer financing with rebates in order to keep sales prices up. So they were like, hey, we'll finance this for you and we'll give you this rebate immediately, right? So the sale price was actually much lower if you took that rebate off. But they were doing these tricks to make sure that their other inventory that they were selling didn't drop in price, right? They're trying to wait it out. They're trying to pull out all the stops to extend it another quarter, to extend it another 2-3 quarters into the future. And maybe the economy will turn around and rates will start coming down and people will be able to afford the higher prices again. So that's what they're hoping. And they might get it. They might just get it. Shelter is 1/3 of the CPI basket. Rents and owner equivalent rent are what the Bureau of Labor Statistics uses to calculate that portion. New sales only factor in as a trickle-down effect. And also, I talked about this on, I think, a recent newsletter, is that like Europe and, well, the EU and the ECB and maybe, say, Japan, all of these countries, they calculate their CPI differently. And one of the biggest differences is shelter. How do they calculate shelter? The US uses rents and owner equivalent rent, but that's not what everyone uses. All right. So what else do I say? When new home sale prices fall this dramatically, owner equivalent rent and rents will follow with a lag. And so here is the biggest drop. If I can, why can't I open that image up? This is the biggest drop year over year in history that this measure has been taken. Even bigger year over year drop than the great financial crisis. We're at negative 18. The great financial crisis got to negative 15. It looks like 71 got to about negative 15. But we're at negative 18 year over year for housing prices. This is massive, people. Massive. So there is going to be a huge lag from new home prices or new sales to owner equivalent rent and rents. So that will be, we've talked about this a lot, 12 to 24 months that this lag can be. So if we're 18% now, I mean, we're going to start seeing some negative prints coming up on shelter here pretty soon in the CPI report. and we should expect major downward movement in CPI in the coming months because of shelter. Okay, let me zoom back out a little bit. This is traditionally a hard component to calculate. And that just showing that everybody calculates it differently, right? Everybody calculates it differently because there's no exact right answer to how to calculate this. They're attempting to calculate the effect of shelter prices or shelter cost on inflation or on the CPI basket. They're trying to estimate that, but everybody has a good answer. There's no better answer here. The best answer would be to count the dang money if you want a number up for inflation. But why can't they do that? Because the Fed and the government and the brainiac economists don't know what money is. They don't know how to go out there and count M5, M8, M22, all the different flavors of money flowing around in the Eurodollar system, all the repledge collateral. They don't know how to count all that, what weights to apply to that. And so they can't count the money. That's why they have to rely on a CPI basket in the first place. And everybody's trying a different way to figure out, especially the shelter component. I say it is likely that the headline price tag will continue to fall until affordability, the amount you pay each month on a mortgage, comes back into historical trends and rates naturally fall. So it will fix itself, but it will take a little while. Sorry, my chair keeps popping. I refuse to buy a new chair. Just like Bitcoiners, I should throw it out. Just sell it on whatever marketplace and use that money to stack Bitcoin. Okay, let's go on to the next macro story. So U.S. Navy responding after militants seize Israel-linked oil tankers off Yemen. Piracy is increasing as I predicted. This most recent pirate seizure of an Israeli-linked ship is at least the second that we know of since the start of the Israeli-Hamas war on October 7th. Now, this says at least 2 others, but I've only seen reporting on 1 other. So anyway, quoting from this article, while no group immediately claimed responsibility for the most recent hijacking, it comes as at least 2 other maritime attacks in recent days have been linked to the Israel-Hamas war. Maybe it was tit for tat. Israel sees someone else's boat. But this is going to continue to happen, people. Below is a video of another hijacking. And I linked to the original video if this doesn't show up in your email that you get. In the video, Houthi, I think that's how you pronounce it, Houthi, use a military helicopter to board a civilian ship in the Red Sea. Quite sophisticated. As recession takes more of a toll around the world, people become more desperate, and governments don't have the tax receipts to keep control. As the U.S. is psychologically weakened and retreating, piracy will become a big problem, like it has been throughout human history until recently. Okay, so that's it for the headlines in macro and Bitcoin. Let's get into some price charts. So we've been watching this channel for several weeks now. This 35,440 was a very important level that I talked about in many different newsletters and many different premium content that I put out, both on Bitcoin and markets as well as Bitcoin Magazine Pro. So that held. We've held that right now. We are being squeezed here between the high that was set on November 15th, the high close price, and this channel. So we're being squeezed here. All right, back to here. We've been watching this channel for several weeks now. It looked like it might break below the important $35,000 level, be returned, but it returned right into the channel. God, lots of typos. Then price experienced some resistance at the high close in the pattern at 37,900. As it stands now, we have to break the top resistance of the channel support by December 1st. So what I mean by that is if you take out this channel a little further, where the bottom of the channel intersects this resistance line at 37,900, that's roughly November 30th. So by December 1st, we have to make a choice. Are we going to break that resistance, or are we going to break the support of the channel for good? So that is the decision that's coming up for the Bitcoin price. On a weekly time frame, the golden cross is getting closer. I added in the volume by price to show once we get over this very near-term resistance, there is almost no previous high volume resistance until 28,000. So I'm talking about the volume by price, or these peaks and troughs over here on the right-hand side. That shows how much volume took place at that price level. And you can see once we pass this last hump of resistance that might act as support actually right now, there's very little volume history at these prices all the way up to 48,000. So that could rapidly move along that slope, fill in that gap in volume all the way up to 48,000. I'll go on the record right now and I say I don't think we'll break 30,000 again. So if you look at this chart, the weekly chart, you have the golden cross coming up. It's going to be crossing about 30,000. That's where the cross will take place. There's also heavy, heavy volume support at that area. There's heavy volume support to get down there too. There's also things like the 200-day moving average down there. There is just all sorts of support that I have pointed out in the past, right around 32 to 30,000. And so I'm making the call that Bitcoin will not fall below 30,000 again. So as close to, if it does dip, buy the dips here, people. Buy the dips. I don't think it will dip all that much. The support, blah, blah, blah. Okay, talk about that. Cycles. Let's talk about some cycles. So Bitcoin cycles are a beautiful thing. If we follow 2015 through 2017 path from bottom to top, price would peak about 1.4 million. 1.4 million. Follow the path of the 2019 to 2021 path, and the peak is about 325,000. So what I did was I took those two patterns and I stacked them up here, matching the low price back here. And you can see they both ended up pretty much at the same spot, which is very interesting. But the 2017 all-time high, that would be 1.4 million. And if we follow this red path, it would be 325,000. One thing I think is interesting about this is that there are unique complicating factors for each cycle. So if Bitcoin was, didn't have any drama, didn't have any externalities, didn't have any outside influences on Bitcoin and Bitcoin adoption and stuff, it would be much more smooth, obviously, right? But in the first cycle, so I talk about in 2014, the top that we had at the end of 2013 actually was Mt. Gox. So Mt. Gox, there was heavy demand, initial demand from a market just finding out about Bitcoin. There were bots on Mt. Gox because they're programmed to get back, to earn back their hacked Bitcoin. They lost 800,000 Bitcoins. Can you imagine? They lost more Bitcoins than it is in GBTC right now. Mt. Gox got hacked and lost. So that was a big thing. 75% of volume went on Mt. Gox. So it was a major, major deal back then. And it drove the entire cycle, the first cycle. Now, in the second cycle, which was 2015 through 2017, that was dominated by the scaling debate and massive internal bickering. The 2019 through 2021 cycle was COVID. That initially set the rally back, then the leverage schemes of altcoins and exchanges. The case could be made that in 2019, the red line here, again, back here, 2019, Price was going to take off, but then COVID hit. That crash likely caused massive insolvencies around the industry, incentivizing the fraudulent behavior that followed to make up for those losses. I don't know. So that's my theory, is some of the worst excesses that we saw from all of these lending schemes and scam exchanges launching their own tokens to back new projects and all this stuff. Some of those things happened, I believe, because people lost their shirt in the COVID crash. And so Bitcoin was headed up higher at this spot in the red line, but COVID set it back and really tamped down on the entire cycle. But it's possible that we could have had just as big a cycle last time. So anyway, what I'm saying is this cycle that we're going in right now, we're kind of tied with the 2019 cycle. And we don't have a COVID situation going on right here. So most likely we're going to rally for the next 6 to 9 months. And where does that put Bitcoin? Where does that put the rally? Where does that put the ETF launch? I mean, these are all questions that are super, super bullish for Bitcoin. So I say that this coming cycle is right on track, but it looks cleaner. And there isn't a noticeable anti-Bitcoin narrative from inside the industry. This time, the opponents are outside, like Greenpeace and the globalist politicians and lawmakers. All right, so that's it for the Bitcoin price topic. Let's go on to Bitcoin mining. I try to keep these to about 45 minutes, so we'll see. I think I have just a few minutes left, but we will go until we are done. So Bitcoin mining headlines. Celsius Network pivots to Bitcoin mining after bankruptcy. Celsius is returning from the dead and going Bitcoin only after their shitcoin lending implosion. Don't be fooled. They didn't have a change of heart. Initially, after their bankruptcy, they wanted to get back into the scam Ponzi game with staking. The SEC told them, are you stupid? So this is a quote from this article. Celsius, whose restructuring plan had also envisioned the company earning staking fees by validating blockchain transactions and managing its legacy portfolio of crypto loans, said in a statement late Monday it had changed course after receiving feedback from the SEC. So they didn't have a change of heart. They tried to get back into the scam Ponzi game, but the SEC clamped down on them. Now, I know I'm not a huge fan of regulation, but if you play stupid games, you're going to win stupid prizes. So, all right. Nigerian Bitcoin miner Trojan Mining launches 500 kilowatt hydro mining site. I'm happy to see Bitcoin mining getting started all over the world. I think the typical rapids and waterfalls in Africa near the coast in many countries could create a unique opportunity for Bitcoin and Africans. If Bitcoin mining changes the calculus for creating more hydro plants, it will be a huge win for Africa. So, if they can build the next project that they have in mind and say, look, we're going to be earning money off this no matter what, because we are going to mine Bitcoin with the excess power, boom, that makes a project viable and that could be built. I mean, this is only good for these people over there in Africa. So, yeah, I thought that was interesting. I did include a video. It just kind of shows their transformer or whatever, this power thing that they've gotten hooked up, and this container that it looks like they have finished setting up, being ready for miners, but you don't actually see any miners, in the container. All right, difficulty. Bitcoin's difficulty increased a whopping 5% yesterday, despite hash rate already being at massive all-time highs and price not taking off just yet. If hash rate is held constant, the halving will come in 141 days. However, if hash rate continues to moon at this rate, we could see a halving 5% before then, so 134 days. So, if all of the difficulty increases are 5% from here to the halving, that means the blocks are coming 5% faster on average. And so on average, that would cut the time by how many days is that? 7 days. So it could be 134 days. Anyway, just interesting to know. You can see this recent hike. Difficulty adjustment was larger than the previous two, but it looks like this one from back in early October was more than recently, this 5%. Okay. Hash rate keeps mooning. There is a rush to get hash rate on before the coming rally and halving. So let's open this up. You see hash rate is just screaming higher, over 500. I think that's exahash. I'm not sure what what number of hashes we're at right now, but it's a lot. 500 is the number we just passed. Okay, mempool. The mempool is still extremely full, but did drop significantly this week. The ultra expensive fees, I should have said are gone. I said are not gone, but they are gone. And we'll see that when we look at the chart. And the network will have a chance to chew through the remaining transactions. Fees have remained manageable for all the largest fees have remained manageable for all except the largest ordinal inscriptions. Gosh, dang guys, my typing, it's because I didn't do much for this last 5 days and I had a lot of typos. Okay, so you can see this over here. There was some darker transactions. It's hard to see with this black background, but those are very high fee transactions. Those are gone now. And we had this big slash in the total mempool size. It's now creeping back up to 300, but that was a significant move this week. And also fees went down. So that's good. All right, layer 2 news. This is about Lightning Network. Wallet of Satoshi vanishes from Apple and Google's US app stores. This was, I use Wallet of Satoshi. I don't use it for my main Lightning wallet or anything, but I do have a wallet with Wallet of Satoshi. But let's read through this. So this is from this tweet they had. So we've made the difficult decision to remove our app from the US Apple and Google app stores and will not serve US customers going forward. This decision doesn't come lightly. Our commitment to providing secure, user-friendly, and compliant platform globally is unwavering. Our top priority is the safety and interests of our customers and our company. We understand this may be disappointing news, and we share your frustration. We're hopeful that the future developments will allow us to revisit and possibly resume our operations in the U.S. But our existing users in the U.S., rest assured that you'll have full access to your Bitcoin funds. You can seamlessly withdraw and transfer them to another wallet. All right. So, that's not good for Lightning adoption. I don't know exactly why. We didn't get any details as far as I know why this happened. Maybe there has been some stuff leaked from these guys, but that remains to be seen. There have been, of course, other wallets that have been blacklisted by the mainly the Apple App Store, not the Google Play Store. But Google has, I think, censored others as well. This is part of the game here, guys. We have to be flexible. You can still use the wallet, it seems. So you just won't be getting any updates, maybe. I don't know if you can update it over VPN or something like that. But very interesting development here for Wallet of Satoshi. All right, guys, that's going to do it. So, Ansel Lindner, Bitcoin and markets. Let me check the comments section here. Dex Invictus, always holding it down in the comments. Thanks for being here. Let me check the Telegram. I'm going to look at the comments to this stream. What do you foresee? So this is from E. He says, what do you foresee for USDT regulation in the future? Do you think it is a good complement to BTC? Well, it is a huge, magnificent weapon for the dollar because the dollar doesn't need a CBDC. The dollar has Tether. I mean, there's also Euro Tether, but nobody wants it. There's gold Tether. Not very many people want that. There's Mexican peso Tether, Chinese yuan Tether. Very, very little. There's like, 10 or 20 million of each of those. And there's 85 billion of USDT. So all of the demand is for Tether, US dollar Tether. And it's a huge, huge benefit to the United States. And we don't want to launch a CBDC. I see this dichotomy. And I don't know how often you listen to my show, but there is this dichotomy between Davos or these globalists and Wall Street right now. And we see that, I think, in this ETF stuff. You also see it in the stiff arming of CBDCs by the Fed. The Fed is owned by Wall Street, the Wall Street banks. They selected Powell. Powell got, in there. I don't know if he'll get another term. I think it's a 4-year term, and it's like the first year of each president assigns a new Fed chairman. But you can continue to renominate the same Fed chairman. But anyway, Powell is not going to budge on this. He says it's illegal for the U.S. to do a CBDC. And so they're going to go towards regulating stablecoins, towards regulating Tether. That's what I see going forward. So is it a good compliment? Yes. I mean, it is the ultimate final boss. A lot of people say it's Augustus Carson's from the BIS, but no, this USDT is the final boss for Bitcoin. Of course, the end state, in my opinion, is going to be backing the dollar with Bitcoin. So it is not so much going to be a battle to the death. It's going to be a battle. And then pretty quick, I think the dollar is going to just add Bitcoin as a reserve. So that is how I see it. Thanks for the comments. Let's go back to see if there's any extra comments on the Philip Rizzo. What's up? Thanks for the heart. Okay, that's all I see for comments. Thanks for joining me, guys. Have a good rest of your day. Good start to your week, and I'll see you on the next one.